Hello and good morning to our today's coffee and consulting about shadow payroll for expats and the question whether you or everything is set for the year end. My name is Friederike Ruch and I'm the CEO of Convenus and have the honor today to be your host for the today's coffee and consulting. I hope you already have grabbed a cup of coffee and we can start with the today's session. We thought just before the year end there are still a couple of things to be done, and now might be a good time point because there's still a few weeks left this year to organize or to check and to adjust and finish everything for the payroll. From the daily practice, we see that the implementation of a shadow payroll is not always that easy, and usually companies or people struggle with really the daily work. We thought we would like to point out a couple of things, also just check whether we are all on the same page regarding what shadow payroll is and where it's actually necessary. And then the last bit will be, or the last couple of minutes will be then for you. So any kind of questions you have, just write them down. There is on the right hand side, you will find a box which is called questions. Just write any questions you have, and I'm happily to answer everything I can. In case, from a time point of view, we will not be able to answer all the questions here, then you definitely will get an answer by email. Therefore, let's start. When is actually a shadow payroll required? There are 2 points basically where a shadow payroll is required, which is basically if in one country there is a social security liability and in the other social security and tax liability, and in the other country you have the payout. So there is a split between those 2 countries. Now, thinking about that, it's not just one country where a social security liability, tax liability, and the payout is for the compensation of an individual. You clearly see there are certain setups where that might be required. For the normal, usual employee, you have them in one country employed, and in the same country you will have the salary paid out, as well as the individual might be subject to social security or taxes. So it's really, we only have then a shadow payroll if there are 2 countries involved, and we have to see and in both countries there is something to be done. Shadow payroll basically also means that there are no payments done. So it's really in the background and usually just done for the calculation either of tax or a social security obligation. So there's no payment made, and usually the employee will also not really see the shadow payrolling. However, still you will have to do it, and in principle it's like a payroll. It's just I usually say it's a payroll just without payout, because you have to do all the same tasks as you would do for a normal payroll. So there's no change as such. There are basically 3 situations where we have the need of an often shadow payroll. One is, and that is something which is coming more and more in the companies. I'm not quite sure whether in your company you also have permanent international remote working people. Um, Basically, these are people who are hired in a company, but they are not working in the place they are hired, but somewhere else. Like the example we have on this slide, a Swiss company hires a sales employee for the UK market. He lives and works in the UK, and he only comes occasionally to work in Switzerland. So for him, basically, his employment will be in Switzerland. Most likely in Switzerland, he will get the payout. However, in the UK, because he's living and working in the UK, a UK shadow payroll would have to be done because of social security and tax reasons. So that is one of the samples where a shadow payroll will need to be implemented. What usually you have most likely seen it the most is for assignments like short-term or long-term assignments, depending a bit on the situation and how you set it up. But in principle, if you send somebody for a limited period abroad, you try to have the individual remaining in the social security system in the home country, and therefore in the home country usually you will have to run a shadow payroll just for having remaining the employee in the social security system, calculating the social security contributions, as well as then deducting them and arranging for the payment. It's also for intra-group transfers. Sometimes you also send people abroad, but they will have a local contract, but somehow you would like to have them or keep them in the Swiss social security system on top. Maybe if you send somebody to a country where the social security system is not as good or in the same range as the individual has that from his home country, and therefore if there is a possibility to keep him in the home system, you sometimes try to do that. So that might be also a situation where you will be involved with an shadow payroll. And then also what we see more and more, those virtual assignments where the employee now might not really move to the other country or not moves at all to the other country. Um, if we maybe look at the examples to make it a little easier, because I'm not quite sure how familiar you are with those assignments or whether you have those in your company at all. So looking at the example where we have an employee of a Swiss company who takes on a new project or a new assignment to Tanzania. He can carry out his work completely virtually, so he will remain in Switzerland, will work out of Switzerland, but will then only travel for a week to get to know his colleagues, as well as then afterwards from time to time to work in Tanzania, but otherwise he will be just working out of Switzerland, but for the Tanzanian project. So most likely he will have a tax liability in Tanzania in the end for the work days he is working in Tanzania. So what will happen is basically you would have in the home country, so in Switzerland, you will run the normal payroll, and then in Tanzania you would implement a shadow payroll for paying the taxes. So it's not that the shadow payroll is just only for the deduction or for paying and calculating the social security, it's also for tax purposes. So both can be a trigger to have to implement that. So as we now know in which situations where we do have such kind of shadow payroll, we have to look now what are our tasks and what do we have to look at before the year end. Basically, we have to look at whether all invoices have been received and have been considered in the payroll, looking at social security liability. Has that correctly been implemented in the payroll, as well as from a tax point of view? Was that correctly done? Um, have we received all the monthly payslips? So in order in any case to really make sure everything has been correctly implemented, and then at the year end we can do basically the year end declarations. In some situations you may have to also issue a kind of salary certificate. Usually, this is not necessary if you do the shadow payroll. For the usual payroll or for the real payroll, so to speak, yes, you have to do. But for the shadow payroll, you usually don't issue a salary certificate or whatever the document is called in the country. If we know what we have to look at and what we need to check on, um, I think we should look a bit closer now about the salary, allowances, bonus, stock options, and those compensation part, because they are also the one or the other thing which might be a bit tricky and where you have to look a bit more careful. In our daily practice, we see that in case there had been some changes during the year in regard to Social Security or taxes, that sometimes the information remains with the real payroll, so to speak, so the payroll where there's also made a payout because the company as well as the employee is more focusing on that, and that sometimes the information will not actually be sent back or mirrored back to the shadow payroll. And therefore, it's always quite good if at just before the year end you have a look again, check whether all the information you have in the file is really correct. And the best is that you also check with the monthly payslips from the country where the usual payroll is run, whether you have the same understanding. Now, be careful if you think you have to have the same understanding from a tax or social security point of view, because just if we look in Switzerland, there as well, if you look at an compensation element which is maybe subject to social security, that does not necessarily mean it's also subject to income tax. So there might be also a different already. So if we now look from the tax liability from another country or social security liability from another country, so there might be even a bigger difference between that. So whatever your job is, who is running the shadow payroll, meaning whether it is because of social security measures in Switzerland, for example, then that's exactly where you have to look at, and you have to look at each element in the end and then determine whether that is now subject to social security for your payroll purposes. Bonus is one of the elements where sometimes there are questions, and where I think the most tricky one is to always look at where the bonus is actually subject to social security and to taxes. And maybe the sample on the right hand side will help us a bit to that we have the same understanding. So Mr. Miller is seconded from Switzerland to China for starting from the 1st of June 21 to the 28th of May 23. He has now received, as usually, a bonus, and one bonus now he received in April 23. Now the question is how that should be processed in the payroll. What you have to look at, now that sample is quite easy because you basically, he had been working in China in the whole year of 22, and usually a bonus is related to the year before. So you will have to check now when you pay out the bonus in April 23, and it is relating to the business year before, whether that individual has worked in that case now in China for the whole year. If we are, the answer to that question is yes, that's the case. So the complete bonus will be subject to Chinese taxation. If the individual would not be having worked the whole year in China, then maybe only a pro rata amount of the bonus will be subject to income tax in China. Now, if we look at the Social Security and think about that, he might have remained or is remaining in the Swiss Social Security system. There again, we have to look at where has the individual been subject to Social Security during the whole year of 22, because it's related to that year. It's Switzerland, if we say that in that case, and then Swiss Social Security has to be deducted. So for bonuses as well as stock options, shares, seniority awards, and stuff like that, you will have to determine and look at for which period it's relating to, and then determine what you have to do from a tax and social security purpose. So just before the year end, you should check whether whatever position you have taken on the bonus or on those kind of compensation elements, that it's correctly done. Assignment allowances, I mean, there are lots of allowances which are paid and or could paid, and some are a bit more tricky, or you have to look a bit more closer what it is, as well as that in some instances it might be subject to taxation, but that necessarily does not mean that it also is subject to social security. If we look at, for example, for moving costs, usually if you reimburse the effective moving costs, it's in most of the countries, as well as in Switzerland, not subject to income tax, as well as not subject to social security. However, if you say you don't pay the effective or reimburse the effective moving cost, but you rather would like to pay a moving allowance, so just a lump sum for it, then the whole amount will be subject to income tax and social security. So you have to look at what it is and whether then there is a possibility to get it exempted from taxation or social security. And always think about what is the purpose of the payroll you're doing and what you have to look at. So you have to be careful on that part as well. Maybe in regard to language courses as well, in case you pay the language course for the employee, then that is usually tax-free. In case you pay the language course for the spouse, which accompanies the individual abroad, then usually that is subject to taxation. So that also means you have to look at those things. Immigration, maybe also one thing. If you pay for the work and residence permit for the individual who is working for you. It's a tax-free amount, and it's also not subject to Social Security. In case you pay for the family on top, which you usually do as an employer, then it's a taxable benefit as well as a benefit from a Social Security point of view. So you have to really look at all the details and see for what it is, and then determine whether how you have to enroll it or import it, implement it in your payroll. School cost is usually something, if you pays that for the kids, then you have always to look at the tax arrangements from a tax point of view in the host country to see whether there is a possibility to get an exemption for it, or there might be then a tax, it might be a taxable benefit. From a Social Security point of view, you also have to check on whether that is subject to Social Security and you have to pay on top of it, or it can be actually exempted. Tax equalization is something which is, I would say, quite tricky, but as soon as you have implemented the right process for you, and then it can be really done quite straightforward. The tricky part is more how to set up the best process and the easiest process. And sometimes the easiest process might need a bit of discussion or clarification with the employee as well as the business, and also with the involved payrolls. What we have seen, what is from a Swiss point of view, an easier approach is to use for the hypothetical tax the taxateur tariff, so that basically the payroll team can run the calculation themselves and have the hypothetical tax accordingly deducted from the payroll. Now, you would have to calculate the hypothetical tax, and at the year end you have to check whether the hypothetical tax, because usually that is done at the start of the year, whether that has been correctly implemented and done in the whole year, because basically when the year end closes, you can't afterwards change anything which had been done in the payroll before. So therefore, it's quite important to look at the tax equalization process you have in place, whether everything has been done. And then also see that if there are any taxes paid, that you have those tax elements in the payroll as well, and correctly implemented as well. Exchange rate is also something which gives from time to time a bit of a discussion. Not that much how to implement it. More, there is always a discussion about which exchange rate someone should use. And basically, there is no legal provision which one you have to use. What we can just recommend is that you choose whatever works best for you. Either it's the one you usually use for transfer pricing, or for VIT reasons, or as a company exchange rate, or you go for whatever else provider. So there's not one rate, but use always the same, and don't make a change for that one that might be the better one, and for that one might be the not the as good one. So choose one and stay with that. At the year end, you have to look then at the exchange rate and whether there has to be done a settlement for because of the fluctuation. Check there as well what kind of compensation elements are entitled to the exchange rate thing, because sometimes there is not, sometimes it's just the base salary which will be looked at, or base salary and bonus, and all the allowance are actually set aside. See whether you've done that correctly, because as there again, after the year end, you can't change it anymore. So we know now in which situation we have to use the shadow payroll. We know we've looked now at the compensation elements, and just to kind of sum it up before we go on a final example to that, and then with time for all your questions, I would like to go through the payroll process with you together. So basically, as said, the shadow payroll setup is as the usual payroll, the same time or same setup. You don't need to change anything. The only thing you need to indicate is that there is no payout. We are now looking at a sample for someone who continues to pay Swiss Social Security system in Switzerland, and Switzerland is the home country. In Switzerland, but that you have in a couple of other countries as well, that the pension fund is not just a percentage taken from the salary, but there is a bigger and more complicated calculation behind. So what you have to do is to declare the salary towards the pension fund, but also towards the other insurances, check on the deductions accordingly, and then implement that in the calculation. Also calculate the Social Security contributions and the hypothetical tax liability. So that is basically what you do at the beginning of the year, and then make the insert that so that it will be more or less done automatically every month, and you don't have to review that every month. On a quarterly basis, you should then see or look whether you can get the expenses from the employee, as well as maybe credit card statements in the host and in the home country, and review that. Review that meaning you check on whether that is now, our payroll is now for Social Security purposes, whether those elements which are listed or which are paid as expenses, and which are on the credit card statements and not just business expenses, but have maybe a private link as well, whether those are subject to Social Security. And then as well, check on the invoices which might be paid through the bookkeeping in the home country or host country. What we have learned in all the years, and there had been basically not really a big change to that, assignees are quite inventful, and they are quite good in figuring out where they should send their invoices to in order to get it paid the quickest. That can be the accounting, could also be through the credit card, or can through the payroll. So they are quite good in figuring that out, and therefore rest assured that you will have to really look and check with the bookkeeping as well, even if they are told they should not do that. If they find out that the bookkeeping is actually the easiest way to get something paid, they might just exactly do that. Also, maybe one thing is that check on the employment contract or assignment contract from the individual and see whether all the entitlements he or she has, whether that had been somehow shown or you have somehow that in your payroll. Don't think that an employee will not, if you can't see the element in your payroll, that the employee might not have requested it or it was not paid to him. Usually, that's never the case. Usually, the assignees are really seeing that they get everything what they are entitled to, and therefore that check is quite important as well. Request the monthly pay slips from the host country, and there the important part is see as well to understand the host country pay slip, so to speak, and see whether you understand each deduction or each payment on it, and then see whether that is then in the end something you have to implement or you have to put also in the payroll from a Swiss perspective, and now here from a Swiss Social Security perspective. Check on stock options, shares, awards, see what the whether they are vested or not vested and when they are subject to Social Security. Check on the tax equalization process, meaning whether taxes have been paid already in the host country so that they are as well implemented in the payroll. And then at the year end as well, do the final calculation for the exchange rate fluctuation and the C for the definite or the final pension fund deduction. And then basically, if you've done everything, then you're good and you can just pull out the declarations for the year end from your payroll system. And maybe one word to that. There are a couple of, in Switzerland at least, we have not just one payroll provider or one payroll tool or system. There are lots of different ones companies working with. Sometimes we have made the experience that still using Excel for Shadow-Payroll might actually working quite well because of those different things you have to include in. Some payroll systems or tools actually cannot really do it, and therefore Excel might be then an option. Try to minimize the use of Excel as best as possible, but as said, sometimes it's the most efficient way instead of maybe trying to change your payroll system so that it will be able to actually have everything what you need for an assignment included as well. With keeping that in mind, our payroll process, we will now just look at the last example, and I just would like to encourage you to write down any questions you might have to that topic so that we can discuss that at the end. Because after the example, I will then answer any questions you have. Our sample is Mr. John Miller, who is sent from the US to Switzerland. His assignment is from March 21 to February 25. He is married, has 2 children, is subject to Social Security in the US, will remain there in the system. He will keep his house in Houston and will not rent it out. And he receives support for finding an accommodation, so relocation services. He gets a salary, an annual housing allowance, school allowance, and additionally, he gets reimbursement for meals and travel expenses. Also in April 23, he gets a bonus of 10,000, which is linked to 22. All the salary is paid out in the US, and the tax equalization process or approach is tax equalization. Now, seeing that he will be remaining subject to Social Security in the US and has the payout in the US. So, how is the payroll set up? The payroll is basically he has the kind of real payroll in the US, and in Switzerland we will have to run a shadow payroll just for calculating the social security, the tax liability, because Social Security is still in the US. So at the year end now, if we are now end of 23, we will have to look at the pay slips. Now in the US, you have the situation that the pay slips or the pay runs can be on a bi-weekly basis, which is in that situation the case. So we have to get all the pay slips and see whether the compensation we have in Switzerland now for tax purposes, whether really everything has been implemented. We have to check on the personal situation because there might be changes on the family situation, as well as maybe also residence. And residence is something which is relevant for the tax tariff. Now, all in all, it's important because of there's from a cantonal basis, we do have different tax rates. So check on the tax tariff as well, whether the correct one has been used. Also in regard to children, whether they are correctly implemented there. From a Social Security point of view, we have to check on the contributions which are paid in the US and have to see how we have to consider them for the Swiss tax purposes. There's, for example, something equivalent to our pension fund in the US, which is the 401k. So we have to look at those elements and see whether we have to actually add that in our for tax purposes or not. In principle, a 401k contributions from the employer, as long as employee and employer pay both, has not to be included. However, what you sometimes see, depending on the position of someone in the US, that the company will pay life insurance premiums in addition, and those premiums, if the employer pays them, you would have to include for tax purposes. Also check on the certificate of coverage, whether that has been received and whether that is covering the year you're now running the payroll. Because basically, if that certificate of coverage is not there, then there might be the situation that you have to calculate Swiss Social Security contributions. Because of in the bilateral agreement, there is not all the branches of the Social Security covered. Check whether there needs to be Swiss Social Security contributions paid in addition. Most likely not, because usually the Swiss standpoint is that as long as there is a bilateral agreement and someone is paying in the other country, then an exemption will be made in Switzerland. But there are quite some tricky things like for accident insurance where you should look at. US taxes, we it was indicated on the last slide that there will be the tax equalization approach will be done. So in the US, there is a hypothetical tax deduction calculated. So see that you have that as well in the payroll for running then the cross up for these calculating the correct Swiss taxes. Child allowance, we understand that he has 2 children, so check on whether there is any child allowance which is paid in the US in addition, or maybe also from a company perspective, and whether there's something maybe even from Switzerland. Usually there should be nothing, as long as someone is not paying Swiss Social Security contributions, there's usually also no child allowance. And then would we just looked at the other case as well, see about credit card statements from home and host country, and check on all the listings there whether there has to be something additionally be implemented in the payroll. Invoices from home and host country, whether everything has been received and also already put in the payroll. Check on the employment contract or assignment contract and all the allowances which are listed there, and see whether that has been paid to the individual or not. There, as I said earlier, before you just take the assumption that it has not been because it has not been paid or you can't see it that he has not received it, check with the employee whether that is really the case. Usually it's not. Health insurance, there most likely if he is an assignee from the US to Switzerland, there might be an international health insurance policy, and the individual most likely had been exempted from Swiss health insurance. See whether that is really the case, and then international health insurance premiums definitely have to be added for tax purposes, and they are not just the ones for the family, but also for the individual, because here in Switzerland it's a private thing, and therefore it has to be added. And there you see that you have, depending on what the amount is for, you have to check on now here for tax purposes what the right approach is. See on the bonus and do the proper demarcation and include the correct amount. Now in that situation, or if we look at the 23 payroll, it's quite easy because he had been working the whole year, the whole 22 in Switzerland. So if there's a payout of a bonus in 23, then the full amount will be subject to Swiss taxes. Holiday, overtime payout, see and check whether there is the need to add something in the payroll. Even maybe from a Swiss point of view, there is usually not the payout of holidays or overtime at the year end. Now, in that case, because he is assigned from the US to Switzerland, there's also the US law involved. And there might be now the situation that he still gets something paid out. See whether you do that accordingly then. And that is basically everything you have to look. What we think is always good also to maybe have a quick chat before you finish up everything with the colleague dealing with the other payroll. So to really make sure you're both on the same page and understand each other and know exactly that you have all the information, basically in both payrolls, the same information has to be be as the basis. The difference is then that one has to look for social security purposes, the other one for tax purposes, and there might be a difference. But all the information and everything should be in post payrolls similarly the same thing, really. So, and that is what we see the most important thing. And if you don't understand something, then just try and see and clarify it. And don't take the assumption that if in the other country there might be no deduction on it, either from tax or social security purposes, that is exactly what you have to do for your payroll as well. And that was basically the session for the part of Shadow-Payroll for expats and all set for the year end. I think you might be now, and I'm looking forward now to all your questions. So let's see. Any questions from your side? I see there is one question already. It's about the payment, about the deduction from pension fund contributions. The question is, in case the pension fund has not correctly been calculated during the year, and even at the year end it has not been corrected, can it still be corrected in the next year? Usually it can be corrected. It depends a bit on your pension fund. In Switzerland, at least, you need to do that. You need to do the declaration and everything before the year end. And if you haven't done that, at least for the pension fund, until the year end, they might not change anything. So even if you find out at the next year that you have maybe not declared a compensation part to the pension fund will most likely tell you there's no possibility at all that they can do something. Would we then usually say, then just declare it in the year you find it out, so that in the end the individual also not loses on the benefit entitlements which are related to that compensation element. But that is for pension fund. For all the other insurances, you usually make the declaration based on whatever you have at the year end and make the last final calculation then also with the December salary, with the last salary part. And there's no problem at all because you usually make the declarations then afterwards, and then everything is fine. Also in regard to taxes, if you usually make the final declaration, or you make the declaration at the year end for taxation purposes. For income tax purposes in Switzerland, if someone is not subject to taxation, then that is done through the salary certificate, which you will do after you've finished and finalized and concluded the payroll. But also there, from a tax perspective, you still have the opportunity until the 31st of March of the following year to make any kind of adjustments or changes. If it's the wrong tax tariff you used, if you have not maybe correctly implemented the number of children, or the marital status is not the right one, then there's no problem at all to change that afterwards. So the pension fund is the only thing which is a bit tricky. The next question is whether a shadow payroll still is required even in there is a payment of salary in the host country and in the home country. Basically, actually, we don't speak then about shadow payroll. It's then rather a payroll in each country. But in principle, from the technical side behind it, it's both. It doesn't matter really whether there is a payout or not, because you have in any case to run the payroll completely in both countries. And as said before, you have to have all the elements in there in order to have built it correctly. So there is no difference to that. I don't see any further questions, so I assume that maybe the one or the other might come back later with further questions. Then, as said, just get back to us by email, and we are happy to answer your questions afterwards. The year is now almost over, but not completely. And we still have one thing to go, which is on the 30th November, we have our last webinar for this year with the topic about the 7 most expensive mistakes in international assignments. So that might be something which is of interest to you. And regarding seminars, we are all done for this year, and then we just have one more coffee and consulting to go for this year, and then also we are finishing with that part for this year. I hope you enjoyed the today's session, and you maybe have even learned the one or the other thing, or maybe the one or the other thing you listed down now for a task for the next couple of weeks. I wish you a great and successful week and hope to see you soon at one of our next events. Thank you for your attention.